Lots going on in the world of commodities that we need to address as well, with US crude oil prices falling more than 4%. Let's get in Jonathan Barratt, Chief Investment Officer at Buoys Securities, to chat about that and lots more. Thanks so much for taking time out. And I think that, Jonathan, we've seen this, a volatile move in crude oil prices ever since we saw Iran launching that ballistic missile against Israel. We saw that spike in crude oil prices. And ever since then, we've been monitoring the movement quite closely. How are you looking at all of these developments and where it's likely to take crude oil prices from here on?
Good morning. Look, I think obviously a lot of volatility, crude prices under a lot of pressure. I guess it's a sense of relief that we get that Israel has decided, based on what the US has maybe just told Israel, that they won't attack any of Iran's facilities, oil facilities. And I think we get a sense of relief that, and part of that geopolitical risk has sort of come off. But we've also got other influences there in oil prices, which are making it come down at the moment. And that's also, of course, China and some of the weak data we're getting out of there. So there are some major things at the moment, and then at the moment, they're causing the price of oil to come lower.
Jonathan, we've not heard anything from Opec so far. It is like we say, silence on the lips. They've just not reacted. Why is that?
Well, yeah, look, I think if anything, if you look at OPEC and their announcements, in terms of usage, they continue to revise the fact that consumption is actually going down over time, and we do hear that coming from them, and that sort of goes to say, well, look, here the first and second largest economies, we're thinking, well, they're softening because of the either deflationary pressures in China, or the reduction of inflationary pressures in the US. So I think with OPEC, they're just saying, well, look, I think consumption's going to continue to wane, and as a result of that, prices comes lower.
Influence the script of how crude will move in the near term? Will it be China? Will it be OPEC? Will it be Middle East?
Oh, look, you know what? I think it's the Middle East. I get a sense that that geopolitical risk in the Middle East is still there. We saw that massive spike just when we saw a little bit of a flare up. That's always going to be there, and we've got some very volatile players there, and anything can happen at any time. So it remains a tinderbox, and I think that will underscore any movement lower for crude oil, because at any stage that will flare up. And if that whole series or that whole area starts to get engulfed in more concern, then all you need is one strike on one oil refinery, and all of a sudden oil, sadly, will trade to the top side.
Where do you see the long-term trajectory of crude settling then? Could it be between 70 and 75 or 75 and 80?
I think when you look at Brent crude, there's a lot of support around that 70, 71, 72. West Texas is just a little bit lower than that. And if you remember the price action we had middle of last year, it just spent a lot of time bumping up and down from that 71, 72. So I think a 72, 77 range, and my risk is to the top side.
Curious to get in your take as well on how the Fed action, geopolitics, etc., have influenced gold prices and how you believe they are likely to trend.
Well, I think it was quite interesting today. We actually saw quite a spike in gold, and we're approaching those record highs again. So I think when you look at what the Fed is doing, I don't think we're going to see, I think we'll see monetary policy there, although everyone's looking for another cut. I don't think it's going to come this side of Christmas, although a lot of people are saying that. I get a sense that the Fed's going to sit there and wait, and as a result of that, that might provide us with some talk of inflationary pressures, which actually might send it and see it to gold. Gold is right on its top side, and I think today's price action, where we're up a little bit and challenging some of those record highs, suggests that, well, we've still got further to go. And I think with what the Fed is doing, and I think there is still some of this inflationary concern still around the corner. I don't think it's sort of completely resolved yet, and as a result of that, that might underscore a good price movement in gold to the top side.
Also seen that huge sway of China on global metals pricing. So how do you see that equation shaping up?
Look, I'm just disappointed. I just get, every time I feel we're getting some good demand coming out of China, we get some disappointing results. Then we see the PBOC come out again, and they look for more stimulus, and I know they've got a lot of firepower there, there's no doubt about it, but it doesn't seem to be translating in demand, and that to me is a concern. The deflationary pressures are still there in China, and we're hoping each time they put stimulus that that's going to really get that economy going, and we'll all benefit from it. But at the moment, it's just not there. So So I think that to me is a major concern, that we're not seeing any type of inflation or price pressure or demand coming out of China, and that worries me. We don't see what's happening in the economy there. It's not as transparent as we like. And as a result of that, they're doing a great job to make it steady. And the economy, although not performing, we're not seeing transition into demand for those base metals. And that's why we're seeing where they are at the moment.
You sense that base metals, especially copper and aluminum, will continue range bound throughout the latter part of the year? Because so far this year, copper has surged about 12%, and aluminum has also seen about an 8% gain.
Look, it's when you look at the economies and the expected demand, it's once again, it's just not happening. So I had a great idea for copper. I thought it was going to sort of have a great price move to the top side. We're still in a deficit, but we're not getting the demand to follow through on that. So we get more and more supply coming through. If the economy, particularly in China, is not performing, that's not going to help our base metals. Although I do feel that copper is a good play on a dip for more of the long term.
Jonathan, so why is the traditional trade, which is Fed cut rates, dollar goes down, commodities, they go up, that has not played out?
Oh, look, I think that's exactly right. You sit there back and you look at it and you say, well, why hasn't that actually occurred? And I think it is that just such a depressed market in some of these commodities, or people are already in that trade and they're looking for other things. And but you are 100% right that inverse relationship sort of seems to be quite soft these days.
Jonathan, appreciate your time. Glad you could join us.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.